Welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by Evan Lazarus. Evan, let's start today off by talking about Starbucks. Everybody's talking about Starbucks and the Square deal, and we have a question from PDow asking if this is a good place to start a long position in Starbucks for a swing trade.
All right, well, that's a good question. Let's take a look. Really, the best way is to look at price, and let's just jump right into it. We're going to start with a weekly of Starbucks, and I always like to start big and funnel it down. Starbucks had a really great run from the 08-09 lows all the way up to this peak high around $60. It seems to me like although the stock is now broken, you can see it broke that huge level down here around 50, and it's seen nothing but selling since. I'm not much of a bottom picker. I don't believe that good trading is about trying to pick a bottom. I think if you're calculated, you can probably leg into this trade. It could trade lower. This stock could come back, and even test into this 200 EMA, which is down here around 36. I think at this point, you want to watch the price action, maybe watch a base. Here's a daily. I would wait for these declining averages, my 8 and my 21. Wait for these to sort of flatten out, maybe even turn back to bullish before getting long, because ultimately what you're doing here is you're bottom picking, and that's a very, very tough trade to make. It based here from basically the middle of May through August. We just broke down out of that base. This is a 3-month base. This could prove to be a very formidable level of resistance if it were to come back up. So I think time is on your side here. No reason to jump right in. The stock is telling you something. Big, heavy volume break. As the market sort of sits at highs, this stock, not necessarily what you want to see. So I think right now it's best to just wait this one out, and maybe it'd be a more calculated buy around $40 into a larger area of support, which I'll just sort of throw up in here. Right around this $40 mark seems like a much more calculated area to start to maybe leg into a tier 1.
All right, here's one from Evan English, who says, any thoughts on Sprint? I like it, but don't want to chase it. Also, he says, thanks for all you do to help educate investors.
Oh, thanks. That makes my job worthwhile. Take a look at Sprint. It's had a huge run from $2.50 to $5. You can't buy it now. You can't buy it now. There's nothing you can do. This trade is, this trade has essentially happened. The only way to leg into this trade, again, this is a weekly chart, so you're going back, looking at sort of a broad scope. We could leg higher. We could get to 550. We could even get to, maybe even $6. But I think right now the risk-reward ratio is just not, it's not in your favor. A couple weeks of some basing over here, nice high-level base would be a much more, appetizing situation in terms of risk. Right now, I would just wait this one out. You missed this trade. Let it set up. If it's going to go higher, it's going to set up to go higher.
All right. HL Stock says the Dow Jones transports are not keeping up with the rest of the market. Does this concern you?
Does it concern me? No, it doesn't concern me. I know Dow theory, and I know what Dow theory says, and I know a lot of people look at Dow theory for confirmation. So goes the Dow. They want to see transports follow. Unfortunately, depending on the type of trader you are, it's not something that I give a lot of credence to. I know there might be others that say, oh, you're crazy. But the reality of it is, as an active trader, someone who's interested in how to make money today, tomorrow, into next week, and in the short term, whether the transports participate or not participate here is not really of concern so much to me. For those that hold this global macro and are very much believers in Dow theory, yes, it's probably something to pay attention to. Is it a reason to trade contrarian or trade against the market or try and fight the shorter term forces? No, it's not. If at some point this rally leg continues, I am pretty certain the transports will at some point wake up and start to follow suit. But for me, just to be honest and upfront, it's just not something that I put a lot of weight into.
All right, we've gotten a couple questions from LinkedIn. Let's answer Market Pickers. This is pretty specific. He's asking, would you consider a swing long in LinkedIn with a stop at an earnings gap of 103 a good risk or reward given that it closed above that level today?
Let's talk about, I've talked about LinkedIn in other conversations. LinkedIn is one of these stocks that gets a lot of attention because of the sheer fact that it's a social media type play. And everybody says Facebook and LinkedIn, and you have to look at this trade unto itself. So let's take a look here at the chart of LinkedIn. And again, I have a weekly chart just to kind of give you this broad stroke of what's going on here. There has not been great price action in this area from 90 to 110. It's been a very, very sloppy, loose type of pattern. You saw that earnings gap up a few days back, and the stock took out stops. There was a lot of stops here at this 110 level. The stock took out those stops, and then the next day traded right back down. This to me looks like a breakout failure. I'd be very careful about buying this stock here. We could very well come back and fill this open earnings gap down here into the mid to low 90s. I really, really strongly suggest trading this stock very, very carefully. Like I said, it's been loose and sloppy, and if I take the candlesticks away, which I've done from time to time, you still have these flat averages. And this is right now a trendless, directionless stock. And those that are buying highs and those that are shorting lows, it's been a very punishing experience. I would give this stock more time. If it's going to wind up to be a good trade, it's probably going to hold in this 104 area and start to leg back up. I'd much prefer to see that happen, have these averages start to turn up and carry the stock as support underneath a trending type of trade. Right now, it's just a very, very, like I said, sloppy, loose, wide, irrational type of trading, trading vehicle right now. And I strongly caution you, because those that tried to buy through 110 are now underwater. And this one could certainly, like I said, in a matter of a day or two, could be right back to that earnings gap. So right now, it's kind of a hold off, in my opinion.
Okay, so no void and tricky for now, but yep. Joe is actually asking if you think it will eventually ever recapture its all-time highs.
I don't know. I mean, if you look at the weekly, there's a lot of resistance here. Even from the IPO, you have this big tail down. That was retested again at 120. I mean, the true actionable trade here would be, a break of 120. That would signal that this stock has lots of upside, because above 120, assuming there's good volume and there's that good engine behind a push, that to me is a very compelling trade, because then it's blue skies breakout and there's really nothing up here that can stop it. So it could potentially go as high as it wants. Until that trade happens, to me, it's just sort of a hands-off. I'd rather just be on the sidelines as a spectator here, rather than trying to pick a bottom, pick a top, and trade this area that, like I said, is just wide and loose and non-directional.
All right, what about price line? Andy says that Scott noted a red dog reversal in price line today. Are you able to explain that? And he wants to know about those T3 visors.
Well, the T3 visors, we gave them away last week. I got an amazing response. They were gone in a matter of a few hours. So unfortunately, we're out of the visors. When we get some more in, I'll let you know. But right now, we're out. And they're being used, just if I can just interject. Mm-hmm. A lot of guys are running the New York City Triathlon Saturday. Scott being one of them, some of my other partners and traders running in the race. So good luck to all of them. We will all be thinking of you as I sit and watch on the couch as you run by on TV.
We'll be rooting for you.
Good luck, everybody. Price line, a red dog reversal. What a red dog reversal really is it's a counter trend type of trade. It's mean reversion, counter trend, whatever you want to call it. So basically, we look for a very elongated type of directional move, and when a stock undercuts a prior day's low and then trades back above it, which it did today, it undercut Wednesday's low this morning and then traded back above it, it can potentially sometimes be a short-term reversal signal with stops then, at today's low. So it's a very low-risk, calculated type of trade. It's not, again, it's hard money only because you're going against the larger forces. You can see there's obviously a lot of, the heavy, I think the biggest volume day ever in Priceline broke down substantially out of its range. Massive haircut, $100 and some odd in one day, 15-20% move. This is a calculated trade for those that like to look for those short-term, bounces. This could be one of those types of scenarios. So Scott mentioned it as a potential red dog reversal with stops at today's lows. We'll have to watch to see how this plays out. But for those that are that like to take that against the trend type trade, is definitely a very calculated risk. Remember, at the end of the day, it's not really about the trade, it's about the risk. What are you risking and what's your potential reward? And if the risks are small enough and the reward is substantially greater, and you understand what the risks are and why, it makes sense. Do we have a crystal ball that says, the stock will, shoot straight back up? No. But we do understand the risk, and that's way more important than what the potential upside is here. The upside, in my opinion, is probably a trade back into the 600 mark, into the 200 EMA, into this, like I said, this pattern that it sort of broke out from. So this general 600 area. So it does have good risk reward. On a longer time frame, here's a weekly, it's also into this 550 area of support. You can see on the weekly, this is really the level that it broke out from, way back when. Let me draw a line here. So it's back into that area. Again, it's not an exact price, but it's into an area where you can make the argument there could be a short-term pocket of support here that the stock could have a tradable bounce from. It did try and rally up today. Looking at a small time frame, here's a 5-minute chart. We did see that undercut yesterday's low, which was right here, traded down, and then it traded back up. It hit this 570 mark, and then sort of fizzled out the rest of the day. Again, this is a tough trade. It's like I said, there's a lot of selling pressure here now. We've seen that the last couple of days. The stock is technically not the same as it once was. It's now a broken pattern. Broken patterns generally, need time to heal themselves, to reset, to find buyers. So I wouldn't necessarily be aggressively long here, but it does have a very calculated risk parameter.
Here's one for you from Freed Trader. He says, hey Laz, MLNX Technologies, MLNX, seem to gain momentum again today. Is it better to wait for a pullback to get in?
It depends on the type of trader you are. I think the momentum intraday traders could probably, a lot of time take that trade through prior day's highs. As I look at the camera, I'm also looking at the chart, so you see my eyes going back and forth. But it broke out of a very nice base pattern here around 110. 109 a couple days ago, 2 days ago, and we saw follow through. We saw good buying yesterday, and some follow through today. This is a stock that is being bought. This is a stock to me that has great moving average support, great trend, and could give you another 2 or 3 days of up. It's probing the upside. There's really nothing to the left in terms of resistance. Now, is this move a little long in the tooth if we look at the weekly? Yes, it is, but when stocks go parabolic, which is essentially what is happening here, look, it's just, vertical, straight up. You don't want to be trying to pick a top here. You want to just let the move play out. At some point on the daily time frame, you're going to see that reversal bar. You're going to see a stalling out of momentum. But for right now, you can still trade this trend. Obviously, a couple of days of basing here, if not maybe a 1 to 2 day pullback. So long as it stays above that 108, 109 area, to me is still a very buyable trade. And even through prior day's highs, that's when you're going to see that quick momentum scalping type trade as it develops on a day-by-day basis. Obviously, the risks are more elevated the higher it goes, but for those that are more intraday and have that intraday, those tactics and techniques, still a very good trade right here.
All right, let's talk WYNN. Here's one from Market Picker. He says, WYNN looks like big resistance stands at 106.50-ish. He says, holding higher in 821 EMA is starting to curve upward. What are your thoughts, King Laz? And I quote.
King, huh? I've been called a lot of things. King is not usually one of them. So thank you for the compliment. Let's take a look at WYNN on the weekly. Again, weeklies are great charts to look at just to get an idea, a sense of direction, trend, whether or not you really want to be here. And when I look at WYNN, this is not a stock that really enamors me. We looked at MLNX 2 seconds ago. That's a much better looking situation for a trader. Trade where money flow is, don't trade where money flow is not. Most traders that try and pick a bottom, or they try and pick a top, or they try and be crafty and they think that they're going to get the best price, it generally does not work out well. For every one time you get that trade right, there's going to be the next 9 that are far worse than the one you got right. So, we look at the weekly. It's not a great looking chart here. Yes, we do see a little bit of a turn up. We can go to the daily now here in WYNN. But downtrend still in place, so a little bit of a short squeeze. You have to remember, think about where is the market and where is this stock. Market, S&P is flirting with 52-week highs, new highs. This stock's sort of sitting on the lower end of the range after a massive sell-off. Not the best play. For me, I think it's a better trade above 105 area, 107. If it can really get out of this base and there's good volume to accompany that, it's a better long situation because there'll probably be a little bit more momentum and some money flow there than trying to craft, just nimbly get in here. It's hard money. Remember, look for easy money, try and stay away from hard money. At some point, if it's a good trade and a good stock and it's going to make a nice move, it's going to give you a chance. It's going to become an easier money type of trade that trends. And when it does, that's when you're going to have a lot more edge. Even if you wind up paying a higher price, you're going to make a lot more money in a much shorter time without the risk and the stress involved.
All right, great questions so far, guys. Keep them coming. We're going to take a quick break, and then we'll be joined with Marc Sperling for another point of view. We'll be right back.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number 2, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And 3, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're back and we're answering your questions live. This time around, we're joined by Marc Sperling. Welcome, Marc.
Hi, how are you?
Good. Glad to have you. Let's start with one from 20 asking about SodaStream. Says Soda delivers another beat and raise and yet gets crushed by shorts. Do you see value in it?
Well, it is heavily shorted. I think the last look, it was around 45% of the float was short. If it gapped up, when it gapped up actually after earnings, and if it would have held that gap, sat there for a little while, I liked it a lot more on the long side. At this point, I was saying if it doesn't fill its gap, if it fills its gap in the first 30 minutes, it needs a lot more time. And that's what happened. It filled its gap that day. It needs more time. I don't think it needs to be on people's radar. You know, the A+ trade to go higher is probably done. It just needs a little bit more time. As long as it's holding above, 38, I think it's fine in general, but I think it needs more time.
All right, here's one from Declan. He's asking about a bunch of stocks, so we can break this down. But he's asking for your view on Johnson Controls, Dow Chemical, and Barrick Gold. So let's start with Johnson Controls. What is your view?
Johnson Controls, you know, it actually looks good, and I like where, you know, what the chart has done. It seems like it's found a little bit of a bottom against 24, and over the last few days, I don't know if it came out with earnings or not, but it, you know, regained its 21-day and 8-day moving average. To me, it looks like a pretty safe buy, you know, using 25 as a stop, even 24 as a stop, possibly to a move to 28. So to me, that actually looks like a good-looking chart. I actually might look at that, you know, over the next few days.
All right. How about Dow Chemical?
Dow Chemical. So you're going with the big boys. Dow, you know, not as pretty as JCI. I would go with the JCI if you're going to pick one of the two. It's fine. It's hovering, you know, still above its 21-day. Pretty boring stock in general. I would wait till it regains its 200-day moving average, which is above 30.70, to really start looking at it. I don't love the chart as much.
And rounding out the trifecta here, Barrick Gold.
What's the symbol again?
ABX.
ABX. Sometimes I know I have about 1,000 symbols in my head. I'm like, what is it? Barrick Gold. Gold, well, it depends. Either you're going to trade the true commodity, which is actually gold. You're going to trade the ETF, which is the GLD, or you're going to actually trade gold stocks. You got to decide really where you want to be, unless you want to be in all of them. Barrick Gold, I don't know if it's best in breed of, you know, the gold stocks or the gold miners, but it looks pretty good. Gold obviously over 1,600 overall. It will move if gold goes higher. So it's just a matter of believing that the gold is going to go higher. Technically, it's hanging. If you're going to be looking to get long, I would say use this level. Use probably 32 or even 33 as a stop for a move possibly to around 37.50, 38 will be some resistance.
Perfect. All right, we have to answer Manny Goodtimes because he's got a great handle here.
What's up, Manny?
He says he sees a rising channel on the Qs right now at the top. Do we go down from here?
Rising channel on the Qs. Okay, so you are right. A little bit of a rising channel. I've been saying, for those that have been listening to me for a long period of time, we've been in a rising channel on the S&Ps for a long period of time. Normally what happens in rising channels is at the top end of the channel, we get some selling pressure. Bottom end, you get some buyers coming in, and in the meantime, we just sort of happily go a little higher. It becomes a little bit of a dull market. Doesn't mean we're going lower, but at the same time, floating up at new highs, you need some digestion. I'd love to see some back and fill-in happen. Maybe come back to the middle of its range, which would be, roughly about the 8-day moving average, even possibly below that. So to me, putting on new aggressive longs here, not what I want to do, especially knowing that it's August. But give me 2 more weeks of hanging up here, then we have another story and we can have another conversation.
All right, let's answer young Jemmy here asking about Iconix brand group. Icon is the ticker. Do you think that Icon will break the wedge pattern formation?
Iconic brand. I don't trade this. I have the daily up right now. Looks okay. Let me see what the weekly looks like to give you a little bit better indication. Again, not a fast mover, but it looks like it's a safe looking vehicle. I'd say against 17 for a move maybe up to the 22. And this is the weekly chart, so you're going to have to be very patient with this one. I do like on the weekly that's over its 200-day moving average, and you have the 21-day moving up a little bit. So it's not bad. It's certainly not my favorite group or industry, but overall it looks okay. It's just you got to be patient with this one.
All right, let's talk BIDU. Dan Cutting, do you see much more upside to BIDU now that it's above all its moving averages since the earnings gap up?
BIDU has gone farther than I thought it was going to go, and certainly faster. That being said, it's technically has repaired itself, and it needs more time to consider to create new levels, high level bases for me to say I'm going to get back involved more than just a day trade or a very short-term trade. I like to actually see it retest, even possibly the 123 level, possibly touches 21-day moving average, which will probably be on 122, 123 first before I say, you know what, I want to go back into these Chinese guys. The Chinese guys, Sina, NetEase, Sohu, they're repairing themselves and they look decent. But at the same time, I'm not putting new longs right here. But at the same token, Would I be shorting BIDU against at 130 using the high, maybe to cover at 126, 127? I think that's a fair trade, but overall it still looks like it's resumed its uptrend. It's just a little bit too early in that period to tell.
All right, here's one from Webb asking, he says, hey Sperls,
What's
how
up?
about RGR ex-dividend today? How does it look for the short term?
RGR, and he asked that, let me put my daily back up. RGR, this is what I like to see, guys, okay? So I love, again, I don't really trade this very much, but I like to see stocks that move up, and I like to be able to get involved on the pullback. A lot of times you're not first to the party on a lot of these rallies, like we had over the last week. If you didn't catch this initial rally, the only caveat is we are in August. We don't have a whole lot of catalysts to back this up. If you didn't catch a lot of this rally, this is what the same with stock. Goes up very slowly over a matter of a month, comes back in, and then it's finding some support around the 21-day moving average, which is a little flat, which means it might stall out a little bit. But overall, it looks decent. Overall, if I'm going to be trading it, I'm probably going to be keeping my stops tight, roughly 44 to 43.50 as a stop if I get involved around here for a move back possibly up to 50.
All right. And, Marvick asking about QCOR Pharmaceuticals. He said it had a bullish outside day. Would you buy now or wait?
Symbol.
QCOR.
Oh, QCOR. You say somebody, you say QCOR, I'm like, I got it. QCOR,
All right,
I'm like,
I'll speak in tickers
Brittany,
for now.
come on now. QCOR, I know this is some newsletter's favorite, bashing, and they love bashing these stocks. So I tend to stay away and shy away from a lot of these stocks that really become analysts, little pet projects to bash down. Technically, trying to find a bottom, I don't love it. If it stays below its 200-day for a long period of time and basis, it's probably going to come down a little bit further. Test back above that 200-day, which is roughly around 40.50. You possibly can have a move back up to 45. So I'm pretty agnostic on the trade overall. I do think, where you figure out your 200-day, that's how you're going to determine really what type of trend it's going to have. Right now, I would really just avoid it.
Okay. DZ asks, what's your opinion of RES and SPPI? We could take them one at a time.
RES. Okay, let me see the weekly chart on this, actually. I like to see a weekly if I can't really tell what I want to, if I don't know the stock at all. RES. So it obviously had a nice move from the $10 to 14. That's a nice 40% move. Anybody should be taking their trades in that type of move. Now the key is, do you get back involved on the pullback? My answer is, usually. That's where I like to get, that's where another good trade is, especially if you miss the first move up. The key is you want to see it hold the 21-day moving average. You don't really want the 8-day sloping down. So to me, am I going to be buying it right here? No. But I think anywhere from the 12 level to the 13 will eventually be the buy area. It's just a matter of, I think it's going to be a little bit more time. It normally is not going to make that next V up automatically. It needs to find a little bit of a base, which will happen over a few days, possibly a few weeks, and I think you'll get a clean entry accordingly. So it looks decent.
Okay. Here's one from Jay Floor asking, First Solar, what are your thoughts? Still more upside?
Well, if you were listening to me on the VTF, following my Twitter feed, I was involved in First Solar. After the earnings play, it's a heavily shorted stock. It used to be my little pet project of mine. I started buying it around 17.20 that first day down after the earnings. I actually thought it would be another day or two down. I thought between 16.50 and 17.50 was the area sweet spot to be buying it. Again, using that 8-day moving average as possibly that line in the sand. It gave me a day and a half, down move in order to make a 3-day up move. I got out of my longs today. I'm still in some options personally. It was a nice move. Percentage-wise, it was a very nice move. You got to think about percentage-wise. 15% in almost 3-4 days. I like that. I'm taking a bunch off the table. To me, still looks great. Still heavily shorted. Give it a few more days of rest. If it was a different month, meaning not August, I might be a little bit more active. And if it was January, I might be a little bit more aggressive on the long side. I think it could actually see 25. So a little bit back and filling. If it gets back down to 19.50, 20, I'll probably be getting back along again.
Nice. Okay. And Eric Butler asking what you think of FCX, Freeport.
FCX. we're noticing a trend, guys. I don't know if you can see it. I can see it. I've been doing this a long enough time. You're seeing these beat up stocks, the WLTs, Walter Energies of the world, FCX, of the, just throw that chart up there. They are coming out of, basically they have formed bases at the very bottom of their trading range. You can see it's still trading at the lower third of its trading range over the last few months. But it's now coming out and it's starting to breathe some air. And the key is, are these little breakouts above this area going to hold? Usually what happens is I usually miss a lot of times maybe that first or second move out of that area. 36 really is the breakout. You could say 35, 50 possibly was that. Actually 35 was that previous area. So to me, 4 days up, I'm not going to be the one new buys on it. I definitely looked at it and I missed it this week as a buying opportunity. Could touch the 200-day at 37.40, but overall, let it come back into the 35 level, the breakout level, 34.50. If you're not long, if you're long, you probably can, it could probably move up a little bit more, and you obviously already have a good entry, so just stick with it.
All right, thanks so much, Marc, for all your help. Keep the questions coming, guys. We're going to take a quick break, and we'll be back with Laz.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there is no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're back answering your questions live. Back with Laz. Welcome back, Laz.
Thanks for having me.
Oh, anytime. We've got one from BFD asking, I tried trading Monster Beverage today, MNST, but had no success. Was wondering if you or your team did and what the correct approach was.
I did see the trade today in Monster. I did see it break down. It was fast. I know that some of my colleagues on the virtual trading floor were talking about it, namely some of the more momentum-oriented guys, Mike Lee, Steve LeVay. I know that they were looking at it. We can take a look here at the chart just to get an idea. Breaking down, right? You can see it was, a little bit in a downtrend going into today, into the 21. For those that, have gone through the active trader program, the significance up here. Boom, straight down, big gap down and some follow through early in the morning. Is it coming back to an area of more significant support? Yes, there's definitely an area of support, in the low 60s, high 50s area. You have the 200 EMA right here on the chart. So, could this be prime for a little bit of a bounce at some point in the near future? Yes, it may. It's got confluence, just multiple things of both support and moving average support down here. That being said, am I buying it, flat out here? No, I'm not buying it flat out here. Take a look at a 5-minute chart. Again, look at the significance of the 21, even on a 5. Every snap into the 21 basically sold. It was not an easy trade. You can see that fast move down, snapping back, very, very volatile today. Closing the day weak, ending on its lows. Not the easiest trade from a intraday perspective that there is. But there's just no reason here to be long. Let this thing set up. Wait for that red dog reversal strategy. Wait for it to take out. Chances are this will probably follow through tomorrow to the downside. You'll probably see a trade lower, right away at the open, and then maybe at some point, around 10:30, 11 o'clock into that reversal time zone, you might see, some buyers start to nibble, a la Priceline today, where you saw that early morning follow through, followed by that reversal. So to me right now, it's a day trade only. I don't think there's really much more to be said here. Use your intraday momentum oriented tactics.
All right, here's a new name, Bloomin' Brands, BLMN. RJM asking, how should we approach a trade in BLMN after 2 up days?
There's nothing I can say here. You have 2 days. As technicians, what we really do at its very core is we evaluate data. And data gives you objective, information about what the market's saying. The market likes it, the market doesn't like it. 2 days to me doesn't make a trend. 2 days to me is just 2 days. Now, obviously, the market has received this IPO. It likes it. It's had a huge percentage move from 11.5 to 13.5, in 2 days. Am I buying here? No, I'm not buying. This needs to develop. It needs to become something. Whether it's, a couple of days of consolidation on the highs and a bull flag type pattern, or, something that says I'm going to go higher. But to just blindly throw your hat into the ring and say, I'm a buyer, for anything other than maybe, if you're a fundamental trader and you really believe and you understand, what's going on inside this company on a much deeper level than just price, that's a different type of trade. The way I look at it, for me, I need more data. I know that hot IPOs tend to perform well. This to me is a hot IPO. It's had a nice move since going public. I just need some sort of entry mechanism or basing pattern from which to look to evaluate risk. I'm not a buyer at highs here. And it might follow through again tomorrow. There's no way for me to really look at it on a smaller time frame. Again, here's more of a smaller time frame. You can look at maybe a 30-minute chart. You can use fib extensions here is a good way to look at where the stock may go. You look at that first impulse up. And this is something I teach in the active trader class. And then you measure that pullback, which was basically down to this 12 area. Trades like this usually will get to its 100% extension, which is about 13 3/4. And then, sometimes depending on how strong, possibly into the 1618, which is about 1460, 1470. So if I'm trading it off of a smaller time frame using a very tactical approach. Smaller time frames, again, you can use that data here. This looks to me like it could follow through early tomorrow. You might see that trade into 14, even maybe 1450, 1460. But anything other than a day trade right now for me is off the books.
All right, Caribou Coffee. Market Picker asking what your thoughts on CBOU are above 1350. Did you get that?
Got it. 1350 Caribou. Got it. Not a stock that I closely watch, so my knowledge of the company is very limited. That being said, you don't have to know everything when you're a technician. You just have to understand what price tells you. Above 1350, much more entertaining of a trade. It made a low at 10. It retested that low at 10. This to me is now a more substantial area of support. Do I really want to be a buyer right here, dead center in the middle of this range at 1250? No, I probably don't. This to me could use a little pullback, some basing, something that says, I'm ready to launch higher. It's not there yet. Keep it on the radar. Watch it develop, on a shorter term basis. Could be a decent, type of trade, but it needs to pull back. It needs to digest. It just had a nice move off of 10. You don't want to pay up, and you certainly don't want to buy something in the middle of a range.
All right. Now, do you ever prefer to be long TLT instead of shorting the spiders itself?
Not really. I mean, I generally am not the type of trader that, I trade everything unto itself. And what I mean by that is if I'm interested in being long the market, I'm going to be long the spiders. If I'm interested in being, short bonds, I'm interested in trading them separate of each other. I try not to take the trade where, one goes up and one, is supposed to go down, because it doesn't always work. If you look at the TLTs here on the chart, yes, as the market's gone up, bonds have gone down, but this trade has not worked, in terms of continuity with each other all that much. So it's not a trade that I look at. If I want to trade TLTs and I want to look at bonds, I'm going to look at TLTs irrespective of the S&Ps. If I'm going to trade S&Ps, I trade S&Ps. I find it very difficult, and a lot of traders would probably agree with me, they're looking at one instrument, but they're trading something else from that instrument. Don't do that. If you're interested in trading the S&Ps, trade the S&Ps. If you're interested in trading bonds, trade the bonds. Unless you're hedging, as a means against, where you're allocating capital against other capital to protect for risk purposes, I don't recommend that trade at all. It's very difficult.
All right, well, speaking of the S&Ps, Gilgal asking, do you think the recent highs of the spiders is just light volume?
It is light volume. I mean, but and this is a great question. It is light volume, but it doesn't matter. I mean, while yes, we want to see volume confirm, and I say it all the time, volume is the engine. You want to see something with a real, impactful statement. Volume is that statement. It's the, a cause, if you will. Do I like to see markets drift higher on declining volume? No, I don't. But the reality of it is that, if you're trying to short something because there isn't that volume there, you're probably fighting a losing battle. And volume can be low for long periods of times while markets can drift higher. And the same can be said on the flip side. Stocks can go down on, lower volume. That doesn't mean that they're going to go right back up. So be very careful about that approach. Am I taking notes here that volume is declining substantially as we leg higher? Yes, but that doesn't necessarily mean that something will happen or this move ultimately will fail. It probably puts it in a little bit of a higher risk category, but trying to pick a top or say this market's going to go lower because it's going up on lighter volume, which I know a lot of people tend to do, is a very, very foolish and risk-heavy type of trade. That's really the best way I can say about it. I really am focused on price. I love it when volume confirms. It makes things a little bit more prone to failure when the volume doesn't confirm. But that being said, stock market right now is close to highs. It's acted very well. Trying to be on the short side of this market has not proved to be profitable for anybody that's been on the short side for more than maybe 10 minutes at a clip. Trust me, I know. I've tried. So that's my word of caution there. Stay with the trend until the trend stops working. At some point, if we get a big sell-off bar and massive volume comes in, yes, something has changed, but don't try and be the first one there.
All right, let's talk Apple. Dan's back asking, do you see Apple retesting the 10-day before we go higher?
I would like to see it. I generally look at the 8-day. I'd like to see it test the 8-day. Apple's one of those stocks where you could, again, just to kind of follow up on the point I just made, there's big resistance, and there has been big resistance at 620 in Apple for quite some time. You can see for the better part of 4 or 5 months, this stock has continuously maybe 1, 2, 3 times it's failed here at 620. So now a couple days ago it pierced that level. Now it pierced it on not great volume. There wasn't a huge volume surge here, which is what we really like to see. Now, is this trade prone to failure? Yes, it is. But this stock may continue and follow through here, and we might see a straight shot to our prior 640, 645 highs in a matter of a few days or a few weeks. This is a nice bullish structure. It's holding this 620 mark relatively well. You haven't seen any real selling hit the tape. The averages are starting to catch up. As this 8 period starts to curl under the stock, you very well may see another blast-off type trade, and it may not have great volume. But the reality of it is, what makes us money as traders is the movement of price. Respect that first. Obviously, we love to see volume confirm, and when it doesn't mean you do something against the trend. It just means maybe you take a lower of a position of risk. You lighten up a little. Instead of being more aggressive at the trade, you take it at half aggression level, or we call it tier 1.
All right, I love this one. Web Miztriz. Hey, Laz, when do you think Duncan will wake up and make the donuts?
It's good. You're good. I don't know. When will Dunkin' make the donuts? I don't know. You know, this looks like it's maybe building into a little bit of a catch play. Could see a trade here into the 21 EMA. You know, above the 8 for the first time in a few weeks. Held the 8 today. Saw a little tick down, snapped back. Another day or two in this area, you might see one more pop up. Get some sort of retracement here. We can look at our retracement levels from previous, highs. You know, you could see a 50% retracement back up to the 32, 33 level. But, this is a short-term trader's trade right now. I don't necessarily know that I want to be a buyer long-term. 8 period here on the weekly has turned down below the 21. Pretty heavy selling. This is going to take time to repair itself. Wait for some more basing, and if it can come out of a nice base, I think it's a better long than anything other than just maybe a 2 to 3 day day trade type play.
All right, got to get this last one in here because you guys are so creative. Freed trader, Laz, looks like investors weren't loving it. Is McDonald's a short here?
Got a creative bunch today,
I know.
Right? All right, so McDonald's, Chipotle, this sector hasn't really done that well. This to me looks like it's setting up for lower prices. This is a weekly. We got the snap into the 21, and that snap was rejected. That usually is a sign of lower prices to come. I suspect that when it gets through this 85, 86 level down here at these lows, you're going to see another trade down. And we could actually come back to 80 before any buyers step in, or even the 200 EMA down here, in the mid 70s. Let's take a look at the daily. Not a healthy looking stock, not performing well. No reason to be a buyer here. If anything, maybe a trade on the short side on any, short-term strength, possibly into that 88, 89, 90 level would be a more appealing trade to me than trying to be a buyer. You can see this 80, these lows here, 86, 87, trying to hold. But this to me looks like it's only going to hold until it doesn't hold. This to me looks like it wants lower.
Okay, well, great questions, guys. Great insight. Laz, any closing thoughts?
No closing thoughts. It's August. As we get into the end of the month, the last, 2 weeks of August into Labor Day, things tend to get eerily quiet. Volume levels seem to get really low. I know from trading on a day in and day out basis, you can see a little bit of that illiquidity creeping into the market. Stocks there's really no, volume driving anything. There are some good looking patterns still intact, and you can still take trades as they come, but manage your expectations as far as what you are looking for maybe the next, 2 to 3 weeks. A lot of traders are going to go on vacation. I know I'm on vacation the last week of August and looking forward to it. It's healthy this time of year. Take a break from the market if you can. Coming at, post Labor Day with a clear head is always a great way to approach the market. Hopefully we'll see a little volume increase a little bit, some more of that liquidity come back, and enjoy the rest of your summer. If there's opportunity, make sure you're tuning into the VTF, because right now the opportunity is really for the short-term momentum-oriented traders, at best.
And if you have questions, meet us right back here next Thursday. Thanks so much, guys. Have a great night.